All right. Perfect. All right, guys. Hello. Hope you all are doing well and enjoying this lovely day. My name is Cimiluca-Radzins, and I'm the CEO of Cannabis. Super pumped that you decided to take the next step to reaching financial freedom in your cannabis business. And if you're not directly touching the cannabis plant, don't worry. I think that what we're going to cover today is going to, help any business owner, regardless of, what industry you're in. And then we'll touch a little bit on some of the ramifications of operating in the cannabis industry and some tips that I have as well. So before we get started, I would like to just tell you a little bit about who I am and why you can trust me. Find me on LinkedIn, find me on Caligia, to check out my resume. But I've helped companies. I'm a CPA. I've had a CPA for almost 10 years. So I'm dating myself a little bit, but helped, I've worked for Fortune 500 companies. I have worked for PwC, a huge accounting firm, global accounting firm. And I've helped hundreds of businesses all around the world improve their operations, from, internal control development to risk mitigation strategies, to cost saving strategies, to implementing new revenue streams. I've saved, companies millions of dollars. I've also helped build out new offices and all of that stuff. So I get numbers. I like them, but I really, really care much more about helping small business owners. So at Caligia, we have, two main goals: to end global cannabis prohibition by 2030, as well as to help small to medium-sized businesses, which is everybody in the cannabis industry, really reach financial freedom. It's hard. It's really hard operating in a startup environment anyway. And then add in cannabis, which is federally illegal. It is so much more difficult. So I'm happy that you joined. Let's get started. So I just want you guys to think is, how well do you know your numbers? I mean, really, really think about that. Just take a second to reflect, and when you think about your business, like, how well do you know them? How well are you comfortable with your sales figures? What happened last week? What happened the month before? What do you predict to happen like next month? How well do you know your cost numbers? Like, what's your biggest cost expense? Is it labor? Is it marketing? Knowing our numbers, as Bill Gates said, is a fundamental precept of business. And it absolutely is. It helps you make better decisions. It guides you. It's, the one thing when you're like, oh, what do I do? You can go back and look at your numbers and be like, does it make sense, right? And I think that a lot of people get so worried, but I'm not an accountant. I'm not a CPA. I don't know how to do that. It's okay. As I mentioned, really, a lot of it is just getting a plan in place and making sure that you have the right people to help you. And it's not going to cost you a nickel and a dime. Like, it really is. It's really, really there for you. So 5 things you should be thinking about to run your business like a CFO. So that's why you signed up. That's what I'm going to give you. So I'm going to give you my 5 tips. There's a lot more than 5 tips, but these are the first 5 that I really want you to think about. So number 1, get your accounting dialed in. So accounting is huge. Accounting is basically how you're going to know your numbers, and the numbers is the fundamental precept to business, right? So you've got to get your accounting dialed in. And when you get your accounting dialed in, you've got to realize that there's very different roles of accounting and finance, and the roles of accounting and finance are very different in organizations. Meaning, my consulting company and my tech company, we don't need the craziness of, the crazy transactions, nor just principles of accounting that maybe an edible manufacturer would. We don't have inventory, we don't have a lot of those things. So our accounting needs and our finance needs are a little bit different than somebody who, is a huge edible manufacturer that has 700 clients in 700 different locations in 3 states. Like, that's completely different set of accounting. So first, you got to understand the roles of accounting and finance as it relates to your organization. Then you got to build out your chart of accounts. Chart of accounts, in its simplest way, leads you to being able to analyze your numbers. So a chart of accounts is what an accountant will go, a CPA will go and do, and they're going to set up your accounting books, like a QuickBooks or Xerox or an Atlas. They're going to go set up your chart of accounts. And so a chart of accounts is, imagine that you've got revenue, you've got cost of goods sold, you've got marketing expense. Those little line items are considered a chart of account. And the chart of accounts then goes into financial statements. So that's what a chart of accounts is. So build out your chart of accounts, because my chart of accounts is so different than that edible company. Like, I don't have inventory. Well, that edible company would. So your chart of accounts is really, really matters for what business type you have. So once you've done step 1 and 2, you got to find a bookkeeper. You are a C-level executive. You are a CFO. You are trying to manage your business like a CFO, meaning you need to be managing your business, meaning you need to find somebody to actually do the work. And bookkeepers know their stuff. They've been trained on bookkeeping. They will not mess up. They know debits and credits. They've got their system in place, and they're really good. So definitely find a bookkeeper. I utilize a third-party bookkeeping company for me. Prices range from $7 an hour if they're not here, if they're overseas, to maybe like $45 an hour to like a really expert bookkeeper, right? And so again, matters how much you're going to need, depends on how big your company is, how many transactions you have, all that kind of stuff. Number 4, never mix business and personal accounts. This is so hard. So hard, but so important that you don't. You can't commingle those funds. You can't commingle those funds for a few reasons. Accounting is going to be messed up. I am Cimiluca-Radzins. I am a person, and I also have a company, right? And so my personal expenses when I go shopping, when I go get a Starbucks, when I go, whatever, do something, that's my expense and not related to my company. So I always like to think about it as, if you're going to get audited, how comfortable do you feel? And honestly, as a business owner, you want to make sure that those are separated, because in the end, you might not get reimbursed if you keep spending your own money. You might not have the financial records. And then if you just put everything, your personal expenses in the business account, like if you get audited, the IRS can be like, oh, no, you owe us all this money. So it's very important to not mix those two. The next, number 5, this one's interesting. So I know we all operate in cash, and it's hard to find a bank account. But if you can, make sure that you utilize that bank account and that credit card to your advantage. It allows you to track receipts. It allows you to manage your cash flow. You can play with payment terms, all of that. The second part, so it says, all expenses should be paid by check or credit card, and only if supporting documentation and proper approval are present. So avoid a petty cash fund. So we talked about the first part, if you have a bank account. The second part is if supporting documentation and proper approval are present. So again, we talked about, you're the business owner, and so you probably won't be spending all that cash. Maybe you're going to have like an operations manager do that, or somebody else. So you just want to make sure that you are reimbursing people for the appropriate expense, and that you've got a policy in place, and that, every time you reimburse somebody, you see a receipt. Hands down, that's kind of the goal. So that's step 1, get your accounting dialed in. Step 2, develop your internal framework. So I've been, a firm believer of, you as a business owner, the moment that you decided to open your doors or to have that idea, you are setting the tone at the top of how you treat people, how you do business, what externally people think about you, and what internally people think about you. That's considered the tone at the top. And that was at the very beginning when you started. And every decision that you do, as you get a team, everything that you're doing as this business owner is reflecting the tone of your organization. And so from a fraud perspective, and it's like called the COSO framework in accounting terms, and I'll figure out if I can add a slide later on. But the tone at the top is everything. So if you have a tone at the top that's like, you know what, I don't really care, we could do whatever, your employees are going to have that. If you have a tone at the top of, you know what, business is really important, we need to set deadlines, we need to hold ourselves accountable, we do not tolerate fraud, but we also have fun, that's a tone at the top. So when you're developing your internal control framework, make sure that you develop a really good tone at the top that you want for future generations of your company. And once you've done that, you build out a risk assessment. So a risk assessment is something that takes businesses, honestly, like big enterprises, it's like a month-long process with many people involved. But, you know, I always use the term MVP, minimum viable product. So MVP style of a risk assessment is that, you know, you think about all the risks internally and externally that impact your business. So if you're a cultivator, There's pests, there's mold, those are, factors. There is the concept of asset forfeiture. There's employee theft, right? Those are all risks that you might have. Number 3, develop internal controls to mitigate those risks. So imagine that we talked about theft as a risk. What would you put in place to mitigate the risk of theft? Segregation of duties, of vaults, security protocols. So you want to develop internal controls, which are also standard operating procedures, to mitigate that risk. And then you've developed them, but now you got to implement them. So that's where process comes into play. And I always think about a successful business has 4 pillars to success, and process is one of them. So you want to make sure that you actually can implement those internal controls. You find a control process owner, and you test it to make sure it's working. Which is 5. You want to test and make sure that you monitored that, because you can set something up, you can do that, it's great, but if nobody actually follows up on anything, how do you know if it's working? How do you know if it's really mitigating that? So you've got to test it and you've got to monitor it on like a quarterly basis. Step 3, measure what you want to manage. So it is so fun to set goals. Like we as business owners want to achieve amazing results. We want to triple our revenue. We want to reduce our expenses. We want to take home a great amount of pay. That's great. But you need to set realistic goals while you're building your forecast. Because if you don't set realistic goals, meaning can you really achieve those goals, then your forecast is going to be messed up. You will not be able to manage cash that well. And you will literally go pulling your hair out all the time. So you want to set a forecast. So you want to estimate costs and you want to estimate revenue and you want to build that out towards your goals. That's like the first thing of, measure what you want to manage. And then after you've figured that out, you want to develop your key performance indicators to measure your success. So let's say that I, have this top goal of, I don't know, let's just say sales, like $50,000 of sales for next month, right? What are my KPIs to track besides that sales number to make sure that I'm measuring my success well? Well, the first thing would be customers, because customers relate to sales, so that could be a KPI. It could be website views, that could be a KPI to drive my sales. So every KPI, just as I was talking about accounting, it really matters what you're doing for business. Like my KPIs are so different than a grower's KPIs. Like they just are, because I don't grow and the grower does not do consulting and does not run a tech company. So it's just that. Number 3, analyze your data. We live in a beautiful world where technology is here and we have data and we need to analyze that data, right? And so you can measure your success if you analyze your data. And then next, you want to analyze your cash. And I'll talk about cash in a little bit, but that definitely needs to be something that you're always thinking about. So step 4, build out your CFO dashboard. So what do you think your CFO dashboard should have? Like I said, everything's a little bit different, but I'm going to tell you some tips. Make sure whatever you decide to have, so that would probably be that previous slide, measure yourself against it weekly or monthly. I would suggest weekly. Like you are startup mode, like every week something's changing, so I would say do it on a weekly basis. Share and assign KPIs to your team. This is so powerful. We're going to talk about it, I think, in a little bit on the next slide, but teamwork is essential to building your business. There's a solo entrepreneur, there's an entrepreneur, and then there is a CEO. If you are a CEO and you don't want to be that solo entrepreneur, and even if you're an entrepreneur that does not yet have team members, think about this so you can implement it. You've got your KPIs. You are responsible for what as a C-level executive, a CEO, or an entrepreneur. You're responsible for driving your mission and empowering people. So that means that you've got those KPIs. You need to be monitoring them, but you need to assign those to a team member. And that team member then knows what they're supposed to achieve. So then you can actually measure what they're achieving. So not only does it help you as a business owner, but it gives insight to those employees that you will have so they know that they're doing their job well. Determine why you are hitting your targets. It's It's really interesting. So I don't think sometimes we reflect hard enough on this. And this goes back just to analyzing things. So if you made that, we were talking about 60,000. Let's say you made that 60,000 goal. You actually surpassed that 60,000 goal, $100,000. Why did you hit that? Why? Was it the marketing campaign that you just ran? Was it the fact that you went and public spoke? Was it the fact that you hit 100 sales doors? Was it the fact that you just followed up with your existing customers? Like, you need to know why you hit those goals, because you know then what is working. Determine why you are not hitting your targets. This is even actually maybe more important. So let's say that you had that goal of 60,000, but you know what? You only got 10. Why? Why? What wasn't working? What made you not hit that target? Did you not try hard enough? Was a team member confused? Was there a crop failure? I mean, there's so many reasons why we don't hit our targets, but we need to be analyzing them. And then lastly, which I think is just goes off to those 2 points, you either repeat it or you correct it. So you got that CFO dashboard. You look at it every freaking, I would honestly say day if you can, every day, week, or month. You share and assign those KPIs to your team. You figure out, you start looking at it. You're like, boom, boom, boom. You're like, oh my God, it's not working. Why isn't it working? Then you have to repeat or you have to correct it. And if you can implement that process into your business, you will have surpassed your competition, because I can tell you firsthand, I have not seen this so much with entrepreneurs. So if you can actually start implementing this into your business, you're going to see the results. Step 5, cash is king. We all know it. We all know that money is power, right? And we all know that and when I think cash, I know we operate in cash in the cannabis industry, like dollar bills, but I also think of cash as cash and cash equivalents. So I think about that. Whatever money's in the bank, if you do Bitcoin, whatever money's in Bitcoin, PayPal, whatever, like whatever you literally have as cash that you could go buy something with, that's what I consider cash. So I don't know where the true stat is about startup failure, but we already know that it's minimum 80% of startups will fail within 4 years of operating. We already know that. I think in the cannabis industry, it's way higher. I want to say it's about 90, 95%, but I don't have that data to show you. So that's just a gut. But I got the stat from entrepreneur.com, I want to say. And so 29% of startups fail because of a cash crisis. That makes sense. I mean, the other failure reasons are you can't lead a team, you don't have the strategy, you don't use the technology. But in the end, if you don't have any cash to perpetuate that, and you don't know how to spend that cash wisely, it's probably because of cash crisis, right? Especially, think about it. Think about if you are raising $4 million and you've never had $4 million before, and you have this great idea and a CPA helps you and all this stuff. Or let's just even say it's like $200,000. You can't go spend that right away. You got to manage that cash. You got to make sure that it lasts. So you got to know what your monthly burn is, which is the second point. So you need to know on a monthly basis, what are you spending? According to your strategy, according to your budget, according to, what you have got to pay people, what is your monthly burn? And so for me, I've got fixed costs that no matter what month it is, I have got to pay that. That's rent. That's my accountant. That's all my fixed price projects that just are recurring. That's my subscriptions, my sales tools, all that stuff. No matter how much money I make, I got to pay that. That's our fixed costs. Variable costs are fun. They vary and you have more control over them. So maybe, you have marketing that could be a variable cost, or if you're selling a product, every product that you sell, you have a associated cost with that, right? And so that would vary on how often you sell it. So that is your monthly burn. The other thing that, it's a little bit harder to do than a lot of people think, but manage your payments to your vendors and also to your customers, right? Your customer receipts. So let's start with due upon receipt to customers. What's that mean? So if I'm invoicing a customer, I want that money now, period. Because that money's going to, if I haven't delivered the project yet, right? That would be a prepaid, but I at least have that cash, right? And so everyone is very different, but I invoice people, due upon receipt. And then if it's a retainer, I would bill against that. So if a customer's like, well, I need that money, you didn't actually perform your services or something like that, I would say, okay, fine, then I can pay you back what I haven't billed. So that's due upon receipt. And that really changes. So let's say you are selling edibles. I'm pretty sure, I mean, it depends. I mean, you have the opportunity to decide what your invoicing is, but imagine if you're like, yeah, I'm going to sell this to you, to the dispensary owner, but you know what? It's due upon receipt, meaning the moment I give you that, you owe me that money. You don't pay me that in 30 days. You pay me that right now. And what's that going to do for you? Well, A, you already collected. Startups really fail in collections. You don't want to have somebody owe you a lot of money, right? If you don't know if you're going to be collecting it, especially in the cannabis industry, right? So that's a huge benefit. But what about on the flip side? What about when you have to pay people? So with vendors, and when you are the person who's going to pay people, try to extend those terms. Extend them to 30 days. You know what? So if I work with an accountant, you know what, which is great because my accountant does this, is that I pay them after the services are rendered and I owe them that money in 30 days. So that means that I've got an extra 30 days of lead time to figure out how I can pay them, to manage my cash better. And you want to manage your cash because you never know what's about to hit. What if you have this opportunity to go invest in something and you just need $5K? You want to make sure you got those reserves. So I always think about it just like cash is king. Make sure you know where that money is all the time. That's why you got that dashboard that we talked about, and that you can be nimble with your cash. Cash is very liquid. So you're probably like, wait, what about 280E? Didn't you talk to me about this? Like, isn't this why I signed up for this course? Yes, you did. And we'll go into that. But I want to emphasize one thing here. I haven't talked about 280E yet because there's not truly a magic bullet for 280E. And I'll talk about what it is briefly, and I'll talk about some quick strategies. But the magic bullet to 280E is to managing your numbers like a CFO and like Bill Gates would, truly. And I'll tell you why. So 280E, oh, it says 280, but 280E, punitive taxation. Started in 1981, drug dealer, I think in Minnesota, decided to file his taxes. Beyond cannabis, was trafficking in some other illegal substances. Claims all these business receipts. IRS finds out about it. They're like, oh, wait, you cannot just deduct every expense. They implement a few years later, I think a year later, IRC 280E. Don't have the language here, but in essence, it's like if you traffic in a controlled substance, Schedule 1 or 2, you cannot deduct anything, like any business expense. There's been tax courts and precedents that have, like the Champ case, Olive v. Commissioner, and some other ones. I don't want to go too much into that history because it's really not that important right now, that have allowed cannabis operators to deduct the cost of goods sold, right? So if you think about it, that's not a lot of money. So realize that. So if you are in the cannabis business and you are selling cannabis, meaning you are a grower, a processor, an edible manufacturer, a dispensary, a delivery service, I believe that's everybody in the supply chain, you're truly trafficking that, then you cannot deduct anything beyond your cost of goods sold. Meaning you cannot deduct HR costs, you cannot deduct consulting costs, you cannot deduct marketing costs. That's crazy. And so that's why you have to remember it is still federally illegal. And you need to help support and petition the federal government for this because this is what's killing us business owners that are operating in cannabis. And that's why we have such trouble banking. So this is a huge deal. So my point is there's no magic bullet to 280E strategy. However, I've helped companies, and a lot of CPAs have, helped companies save 280E cost and exposure. I mean, I've helped a company save like $12 million in planning. So even though I just told you that, there's definitely ways, knowing that you can only deduct your cost of goods sold, that you can truly benefit from doing a few things strategically. So one of that is entity structuring. And again, there's no shoebox. There's no shoebox one size fits all for everything. Everything is kind of customizable. But entity structuring is something that big companies do, that cannabis operators can also do, where you would, maybe have an outsourced service provider, like a business processing outsource provider or a management company to, help manage some of your entities if you have multiple, and that could offset some of the 280E costs. That would be for a bigger cannabis company. But the next three things are for any company, and they kind of reflect what we were talking about earlier. First thing is get your contracts in place. get them in place with your employees with detailed job descriptions. And I say that because think about it. What is cost of goods sold? Cost of goods sold is what it costs to make that product or service. And direct labor, repeat, direct labor is a huge component of cost of goods sold. Meaning that master grower salary is considered direct labor. That inventory manager is considered direct labor. That bud tender that spent his or her time counting inventory and being compliant is considered direct labor. So make sure that you implement contracts in place with your employees and detail out what their job descriptions are. And make sure that you're very confident in what they're doing. And not only is that going to help you if you're audited by the IRS, but it's going to give your employees some insight of, hey, yeah, I understand what I'm doing for the company, and I actually have my KPI. So it's like a win-win, to tell you the truth. And so once you've figured out those contracts for your employees, make sure you get some detailed time tracking. Payroll and all that kind of stuff is like, if you can detail time track your employees, if you're audited, you can be like, yeah, Simone, she's my compliance inventory manager, and you know what? Go check her time card. That's why I allocated and deducted her expenses for 280E. I can give you some links of my preferred time tracking and payroll providers, so just make sure that you ask me, and I can definitely send you some links. And then, guys, manage costs. That's it. If you know, truly, if you can't figure out the entity structuring, like if you work with your CPA and they're like, you know what, this is going to be your exposure, then you got to manage your costs. You really got to be wise with your marketing dollars. You got to be wise with your consultants. And you got to remember that it will be federally legal here. It's just a matter of when. And, depending on who you talk to, people think 5 years, 10 years. We don't know because it's so chaotic right now. But I would anticipate no earlier than 5 years. And so think about that. You have to pay this type of tax because you're illegal for 5 years. So you better freaking manage your costs, right? Because I want you to be successful. I think you want to be successful. You don't want to have to close the shop because you have to pay so much in taxes. So make sure that you're managing your costs. So final thoughts. What are my final thoughts? Startups fail because they run out of cash. Plus a lot of other things, but really because they run out of cash. So make sure that keep that in mind. Hope, it's not a strategy. You got to build your business around facts and data, 100%. That is like the biggest thing that you got to do. Cash is king. Monitor those cash reserves. We talked about that. Set a good tone at the top and build internal control into your business. Please, it's like the best because it's going to allow you to scale and it's going to make employees' lives easy. It's something that we don't give enough talk about, but it's huge. And then lastly, for all you entrepreneurs and executives and C-levels that think you have to do it all, you don't. Build that dream team and delegate. I mean, you can move mountains with the right team in place if you know that you got the right team and the right people on the bus, from good to great. From Jim Collins, that's what his motto is. But also, once you got those right people on the bus, you got to be able to really delegate that stuff, right? And you have got to know, as the business owner or the C-level executive, what exactly you're delegating. So make sure that you do that. So what are the next steps? I would say, first, please join Caligia. So that's my company, tech-based platform, allows you to connect with thousands of cannabis professionals all around the world. We've got a ton of free resources, webinars, blogs, podcasts, my podcast, Cannabis Business Minds, with my co-host, Kristen Yoder. Our whole goal as an organization is to help you guys. And then I ask you took the time to listen to this entire webinar. You better start doing something about it. So please start implementing these things by October 2017. You cannot implement them all, I get it, but you can start. And then one other thing, I didn't put this in the bullet point, but I have a 8-week online course with office hours and, really a very dynamic course that starts October 9th. And it will end, our final exam and everything is at the very end of December. So it would be gearing up for getting your business solid by 2018. And join. I have scholarships. We have I think there's about 5 scholarships left to give out, and the scholarships are due on September 20th, so I can give you guys some links to that too. But really, thank you so much for taking the time to listen to this podcast and wanting to take your business to the next level. I truly believe that if you know your numbers, you will get successful. And if you can delegate and do all the things that I kind of put in this webinar, I think it will take your business to the next level. So please implement this stuff and have a lovely day. And I have it tattooed on my wrist, but the sky is your limit. You just have to realize that you got to take destiny of that, and you've got to take control of your destiny. And it all starts with you. All right. Thank you so much. Bye.